Hey traders, Desmond here from IronFX. Let me ask you something that sounds simple but has messed with more trading accounts than a bad entry ever will. Which time frame should you trade? If you have ever looked at a chart and thought, why does the 5-minute look bullish but the 4-hour looks bearish and the daily looks like it has a different opinion? You are not alone. Here's the thing. There's no best time frame. There's only the time frame you can execute consistently without second guessing yourself every 10 seconds. Today we are going to match time frames to your trading style, your personality, and your lifestyle so you stop fighting the chart and start reading it the right way. Think of time frames like camera lenses. A 1-minute chart is a zoom lens right up close. You see every twitch, every wiggle, every fake move. It feels exciting, but it is noisy. A daily chart is a wide angle lens. You see the whole landscape, right? You miss tiny details, but you understand the story, right? So asking which time frame is best is like asking which lens is best. It depends on what you are trying to capture. Now, most traders fall into one of three buckets. First, scalpers, they want action now. They live on the 1-minute, the 5-minute, and sometimes the 15-minute charts. Second, day traders, they want structure, but they want to be done by the end of the day. They usually work with the 15-minute, the 30-minute, and the 1-hour charts with the 4-hour for context. Third, swing traders, they want cleaner signals and they are happy to wait. They live on the 4-hour, the daily, and sometimes the weekly charts. Scalping can be great, but it is not forgiving. It is like trying to catch coins in the wind. You need fast execution, tight risk control, and you need to accept being wrong quickly. On lower time frames, spreads matter more, slippage matters more, and random spikes matter more. If you hesitate, the trade is gone. If you overthink, you will chase price. And chasing price is how you end up jumping on a speeding train at the worst possible time. Day trading is the middle ground, right? It's like driving in the city, right? There is a movement, there is traffic, and you need rules, right? But you can still plan your route. On the 15-minute to 1-hour charts, price action is usually cleaner than the 1-minute, and you get enough setups without staring at every tick. But be honest with yourself, if your job or your schedule does not let you check charts regularly, day trading can quietly turn into forced trading, and forced trading is expensive. Swing trading is where a lot of retail traders actually belong, even if they do not like hearing that. It is like sailing. You are reading the wind, not reacting to every wave. On the 4-hour and daily charts, structure is clearer. Support and resistance tends to hold better, and you spend less time glued to the screen. The trade-off is patience. You might wait days for a setup and you have to tolerate pullbacks that would scare a scalper out of a perfectly good trend. Now let's talk about the biggest traps. Trap 1 is picking a time frame because it looks exciting, not because it fits your life. Trap 2 is going too low, too early. Lower time frames do not make you better faster. They often make you worse because you are learning in noise. It's like learning to drive in a Formula 1 car in the rain. Trap 3 is time frame hopping. You enter on the 5-minute, panic on the 1-minute, justify on the 1-hour, and regret on the daily. That is not analysis. That is emotion wearing a disguise. Let me give you a practical example using gold. Right? Say gold is trending up on the daily chart, higher highs, higher lows. The big story is bullish. Now you drop to the 4-hour and you see a pullback into a prior support zone. That is your area of interest. Then you drop to the 1-hour and wait for confirmation. A strong rejection candle, a clean break of a minor downtrend line, momentum returning. Notice the workflow, daily for direction, 4-hour for location, 1-hour for timing. Clean, structured, and calm. Here are the principles that keep you sane. Your main time frame must match your decision speed. And if you need 20 minutes to decide, do not trade the 1-minute chart. Right? Start with the higher time frame for context, even if you enter lower. And keep it simple. 2 or 3 time frames is plenty. More than that, and you are just collecting reasons to hesitate. If you want a simple starting stack, try this. For swing trading, daily 4-hour, 1-hour. For day trading, 4-hour, 1-hour, 15-minute. The market is not confusing, your lens is. That's it for today. Stay tuned with IronFX and I'll catch you in the next episode.